want to know why running on the treadmill 7 days a week doesn't work for you when you're trying to lose weight? Because it never has. And I know that's hard to believe, but it's true.
right, good morning. You ready? All right, happy day. Today is a Tuesday, greatest day ever. It's a good day to be alive, good day to be a currency trader. We actually got some interesting things happening today technically, so we can go into that. We can also talk fundamentals. I can answer your questions. But thank you for being here. Thank you for being part of the Forex.Today YouTube community of 16,000 foreign exchange traders. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Okay, so I'm just reading through the chat here. Good morning again. But while I'm going through the opening ceremonies here, would you tell me, like Ravi, for example, says, hey, tell me Bitcoin analysis. Okay. While I go through the opening ceremonies here, why don't you tell me what currency pair, commodity, or topic you'd like me to cover today, and I will peruse over it while you type. So thank you for being here, part of the Forex.Today YouTube community. Please get involved, ask questions. Please do the like button, and just click it now maybe. Okay. So yeah, take notes, ask questions, be involved. Be positive. If you have negative energy, check it at the door. Be professional. That's what this is all about. I try not to be the rah guy, go guy, trade guy. This is a little more professional. You are in my office, so let's treat that as such. What else? Pretty simple stuff. I will cover technical, fundamental, and trader psychology. It'll probably take an hour and a half today. That's interesting, right? And also, I'd like to thank the sponsor of our community, tradersway.com. They give you access to Forex, to gold, to silver, to Brent crude, WTI, natural gas. Where there's Bitcoin. There's tons of assets and asset classes that you have access to. But the most important thing is when you pull the trigger, they actually execute your trade into the interbanking system. They don't book you. I've actually never talked to them about it, but I can tell just from experience it's not what they do. So that's cool. It's rare. It's precious. It's desirable. It's valuable. But on top of that, fast execution speed, which it's been probably 5 years, but I did a third-party test, and they are faster than almost all other brokers as far as execution speed. Especially the big name, big well-known boys. They're actually slow because they stuff like 100,000 traders on one server because they're trying to save the $7 or something. So anyways, so those are all things that you want in, world-class customer service. So tradersway.com, thank you for being part of our community. Please visit them, open up a demo account, and just give them an opportunity to earn your loyalty and your respect. Pretty simple stuff. So here I am, rock you like a hurricane. All right, so I want to start on this Aussie yen today, and let's see what you guys said. Not a lot of people actually responded. Really? How come? What do you want me to cover today? Master Trader says, yep, and the ECN, fees are low. The ECN fees at Trader's Way right now, or at least the last time I looked, are 50% off. Okay. Sudan says, hey, why is Kiwi strong despite the central bank expecting going negative interest rates? We actually talked about that last week, but we can cover that again. But if you were here last week, you would know and you'd be on it. Okay? Yeah, Jim's bringing it up. So why don't I just address that now? There was like a deputy minister of something at the central bank, and he says it may not be as bad, and they may need less help than expected back in March, April. So basically, when COVID hit, they freaked out. They're like, move over, Biden. Give us room in your basement. Save us, Biden. So anyways, yeah, so they're saying, hey, wait, maybe it's not as bad as we thought. And that is a potential change. Okay? Okay. So, okay, Aussie dollar, Euro dollar, that's it, huh? You guys are not very typative today. Beast, pound yen, okay, Euro yen, great. Steve Murphy says, hey, how does oil price affect the stock market? And, well, it depends on the situation, but we can try to talk about that. USD CAD, very cool. Jodine says Aussie signed a trade agreement with China. Yeah. Very cool. And then, of course, we know there's tons and tons and tons of Aussie news this week, so I'm sure you're trading the Aussie. So I'm going to start here Aussie dollar or Aussie yen, and then we could take a look at Aussie dollar as well. Pound Kiwi, says Daniel. I don't really trade crosses like that, but maybe I'll look at it. I might have other things to do, but I tend not to do relative strength. I tend to trade fundamentally. But you might argue that that's fundamental. Okay. More likely the Kiwi's strong today and the pound is weak today, but we can look at that. And some biddy. Kiwi Swiss franc. Yeah, okay. That's usually like that's a trade I'll do, but it's usually like the 15th trade. Not the first one, second one, third one, fourth one, fifth one. But yeah. But we can take a look at that. Sure. So thank you, everybody. I'll do my best to cover some, if not most, of that. Cool. All right, so let's start here. The reason I bring this up is we were talking about daily on top of weekly on top of monthly, and what I need right now to remain a bull is I need to stay above this line. So we got to really, I mean, the real number is 76, but sort of the Obama line in the sand is sort of here. Like, this is what I want, but I might be okay with this line. But I really don't want to get down there because then we get consolidation. So I kind of need this to happen. So I got to wait. Now, the cool thing is I wouldn't trade this on a 4 hour. I'd drop into a much smaller time frame. But what I'm trying to say to you, I like the way you trade. That's the strategy. So now the tactics would have to be deployed or executed on a much smaller time frame, 15 or less. And so I would like to see this bottom out. Okay. So it's just red flag. Whoa, 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 whoa. Red flag. Okay. So that's that. In similar fashion, we did this one yesterday, remember? Monthly on top of weekly on top of daily. And it hasn't not failed or it hasn't not worked. It hasn't not worked. Okay. Yes, Johnny says, hey, 76.2. Yeah. But typically your stop would incorporate that anyways. So I want to do Aussie dollar now because there's a lot of questions about Aussie, and we know this is a big Aussie week. All right. Okay. And so what do we know? Okay. We know on the 1st of November, the bullish plan was there. There's election night. And isn't that cool? So what is really going on now is this second chance. Now, this is a dangerous one because if you're pure technical analysis, okay, you know that's a top, but you also know that this lower move suggests or indicates, remember, it's not an opinion, it's just what the technical analysis says. What it says is this. Will that have to happen? No, but the probability of that is, let's say the probability of that is significantly higher than the one on the left. So let's make this so the orangish circle there, it's like very, very, very likely, and the blue one is like not likely at all. Okay? Do you understand that? So this is going to come down to your plan. If it's a short run plan, you would take profit. I mean, the best plan is long here, exit. What I said was this is like a second chance move, and that's a role reversal. Kicking off, kick it over here, baby pop. Kicking it off the 55. Really, that's really all you can expect on the short run. Now, the long run, you might be taking Aussie up till the end of the year or something. Well, I don't know what your intentions are, but technically speaking, this is a very, very significant price from the beginning of the month and from the beginning of the week, really, right? So I don't know what your plan is. Are you taking this up to 80 or are you bailing at 73? Okay. So that part I don't know. What I'm pointing out is that you have, based on technical analysis alone, the probability of a top over, let's say, the next week or even the rest of this month is very, very high. The technical analysis is saying we'll probably have a drop down here before any chance of a rise. Okay? Yeah, selling it is this way. If it was December, I'd start selling this. But because it's not December, I think it's a bit early. But it's a nice little technical trade. Okay. Right? So I think here, if you were going to sell it, it's a bit early, but you could try. You could try tiptoeing like 15-minute cycles down. But on this time frame, you have time. Like, for example, it could go this way for you. Okay? So do you have to be on this first move? No, but a lower high would be cool. Roll reversal, okay? And reset off 70 again. Yeah, that's pretty likely. So New Trader says still over the 21, not on that time frame. Okay, so it depends on what 21. And that's what this is. So you're saying, well, it's still over the 21 here. Okay, yeah, well, okay. So I mean, I guess how should I say it this way? I feel more confident in moving averages when you're trending. So when you get sort of this going on, and you're like, well, the 21. I might argue, for example, oops, I might argue, for example, that we're not trending, we're ranging. In that case, you wouldn't use the 21.55 at all. That's why, your alpha is to make the right decision in these moments. So I don't know if it's trending or not. But if you were ranging, you wouldn't use the 21. The 21 is dead. Okay? You'd only use the 5.8. And going back to the other people that may have already shorted this, I'd say, well, on the daily, you're a bit early. You could probably do it next week with the same results, just lower risk. Okay? Now, if you're scalping, once again, that's even more different. What you're doing is you're acknowledging this as a top and you're hunting stops. So yeah, you can scalp it down today and tomorrow and all that kind of stuff. But, it depends on how you analyze this. That's the whole point. That's why there's no answers, right? Like, how do you analyze this? Is this trending up? Well, then you would have bought the dip at the beginning of the month. Okay? And I was bullish this at the beginning of the month. You knew it 6 months ago that I'd be bullish in that scenario. So very cool. Very interesting. But maybe it's not trending. There's still a lot of uncertainty about COVID. There's still a lot of uncertainty about the presidency. There's still a lot of uncertainty. And we talked about this. If Biden had won, we don't know who is going to be in the cabinet. So, for example, Janet Yellen, Secretary of Treasury. What do you guys think about that? In that case, if Janet Yellen is Secretary of Treasury, she can actually literally print money, which is good. Because people would say when she was at the Fed that she would print money. I'm like, no. They create money, but they don't print money. They create money, they create currency, but not money, not paper money, right? So anyways, so Janet Yellen's going to be actually able to print money now. She'll walk through the factory and say, nice money. So, is that good? Is that bad? What do you think? She has a bit of a liberal point of view. Well, sure. So, hey, Bernanke light on top of Obama light. Sounds great. It's going to be like the diet, the diet White House, huh? All right. All right. So there you go. So if that's trending, you would not trade the 21.55. You'd only trade the 5.8. Okay. Salim, is counter trend trading? Is that right? Where's the... Stephen Murphy, these should be the same templates. This one is probably Wyatt's. It's called Wyatt's Pivots. Wyatt was a member of the FX Bootcamp community, and so he took the pivot points and with all my settings and stuff like that and made the pivot points. But you might have like this version, for example, is the trade of the week. Right? There's the trade of the week. And then, of course, bullish position trading where is it? Position trading bullish is that. So there's the trade of the month, guys. We knew that on the first day of the month. Isn't that nice? Isn't that clean? Do you guys like how clean these are? They're like, yeah, that's the best price you could hope for, and you should probably exit here. Isn't that nice how there's no other sort of distractions? Master T got that? Right on. So Cav says, what time frame would you look for a 5A cross? It depends on the type of trading you're doing. So for example, if you were scalping, you wouldn't wait on a 4-hour chart because that would take 16 hours. So if you were spot trading, like you were going to be in this trade for 2 or 3 or 4 hours, or maybe the rest of the day, again, you wouldn't use the 4-hour, would you? Because it would take 16 hours. Like by the time it crossed, you lost a day, right? So here's how you break it down, guys. Everyone pay attention. Write this down. By the way, and I'm going to mark this. Okay. Now, first of all, I have to ask you for the thumbs up. Before I've done anything, give me the thumbs up. Tell YouTube this is quality. All right. So the question is, if you've made the determination to sell this, and we were talking about using a 5-8 cross as sort of the trigger, what time frame is it best to sell it? Okay, and what I started talking about was, well, it depends on what your strategy is. Like, are you a scalper? A scalper would trade it differently. Are you a position trader? Are you a day trader? These are all different, right? So if your analysis says, well, this looks like a top on the 4-hour, and bear in mind, like I said, this bottom was the projected buy for this asset last week. We knew that last week. If you were a bull, you'd buy it at this price. It's 70, which is also a psych level, right? And then if you bought it down here, you should take profit at 73.27. Boom! I'll remind you, we knew that way over here. Okay, you would buy it there and you would exit there. Okay, so now we say, well, maybe this is going to be a double top. Okay, cool. If that's what you think, that's cool. And I said, in this scenario, what you're really hyper-focused on is using these two moving averages. A crossover would indicate that this level, this double top, was respected. Okay, cool. So there's the setup. All right. So now, if you planned on being short this for the rest of the year, let's say the rest of the month, another 2 weeks, you could probably wait on a 4-hour chart, and it would cross down, and you'd probably catch the next rally, and you would trade something like that, and you'd probably be short here, not today, but maybe tomorrow or the next day, and you'd be short all week, and you could trade the 4-hour 5A cross. But most likely, you're not making that decision. First of all, it's only Tuesday, okay? I mean, you can counter trend on a Tuesday. I mean, totally can. But I don't think that's what most people are thinking. Okay, so let's go to the smaller strategies, like a day trade, like you want to be short all day today, or maybe it's for tomorrow. Or is it a New York session between the New York Open and the London Close? Or is it just a scalp where you're hunting stops? Because if you're scalping, you know there's a lot of bulls that are seriously going, oh my God, I got to get out, I got to get out, right? So what do? You force them out. You hit their stop, and those hit more stops, and that hits more stops, and people panic, and you're hunting stops. So how do you put it all together? What time frame? The question is, what time frame is the best 5A cross? Depends on your strategy. So if I looked at this and said, okay, I want to get short today on this. I got my strategy now. The strategy says it's going to do probably something like this the rest of the day, and maybe even tomorrow, right? Okay, cool. But I wouldn't wait on that because it takes 16 hours, right? So you could drop into a smaller time frame. And the smaller the time frame, the slightly different strategy. Okay? So now you would, even though this is a double top, you treat it as a double top of a double top. So you could have shorted, let's say, this move here. You see how you get your top, bearish engulfing candle. Now this high is lower than that low. Okay? And now you got the Fibonacci retracement, right? So if you were here, let's say you would have already had your opportunity at 73.20. And you're just getting the 5A cross now. But you can see, well, you would have maybe watched this chart here and said, okay, I need a sign. I need a sign. Okay. No longer going up is a big sign, right? Another no longer going up. Another one, no more going up, and even a slightly lower low. And then no higher high and only a lower low. So now if you were using an oscillator, you know how the stochastics, right, works. You know how the math of a stochastic oscillator would actually indicate that this had topped out. Okay? And for you to see that, let me just, right, because I can calculate the stochastics in my mind. Where do they put it on here? Trend, right? Standard oscillator, sorry. Stochastic oscillator. Okay. Okay. It doesn't look right, though. Let me adjust this. Oh, is that what people use? What do I use? I use 835, right? I think. It's funny. I don't use that. That was ugly. That's ugly, too. Hang on. Let me adjust this. 853, I think it is. Yeah, okay. So now we have the cross, right? We have the rollover, but also notice going into this, giant divergence. Okay? So you put that into there, and what you say is, ooh la la, that bearish engulfing. Oh. That bearish engulfing was the key. Okay? The key. Meaning, as it's happening, you say, ooh la la, I see it on the 4 hour, now I see it on the 1 hour, let's get physical. And you drop into a 15-minute or a 5-minute or something. But when you see this, so breaking it down now, we had on that first candle some red, and then on the second candle even more red. So now we have down, right? This is the top. This is the top. This is the failure to make a higher high and the actual higher low. So the way I drew this, the Stokes, or not the Stokes, the Fibonacci, what you're doing is you're looking for a lower high. So you can see at this point on the 5-minute chart, remember you set this up on the 4 hour, which 5-8 cross do you take? Right? Well, you got the 4 hour set, the 1 hour, it's not crossing yet, I call it kissing. Maybe you use a 15-minute chart for your 5-8 cross. So you go here, okay? See? So you would have been short up here, for example, or so on and so forth. If you're scalping, you might have, like, this is a risky scalp, I think, but this is an obvious scalp, and then this is the reload, because that's just price action. Right? For example, on the price action angle, you would have, let's say, for example, lower low. Once it's made a lower low, you look at your old you look at your old support and you drag this across and say this old support here will likely become resistance in the future. And that's what price action is. And you would take that on a scalp, on a 5-minute chart. On a 15-minute chart, it's obvious. On a 5-minute chart, it's even more obvious. And maybe in that scenario, you're using 5A crosses. Okay? So there's one. If you're scalping with price action, you could use a 5-minute chart with your 5A cross. On a 15-minute chart, which I call the spot trade, there's a couple of things going on. Not only is this hardcore price, as we know on the 4 hour, it's so super obviously a double top, right? Like slap in the face. So what else is going on? Okay, New York is opening, and all the New Yorkers see it. And all the London boys see it. And they're like, oh my gourd. And by the way, do the New York boys, when they log in, when they walk into the office, do they want to buy high or do they want to sell high? Do they want to buy a double top or do they want to sell a double top? So that new flow of money is important. This time of day is important, right? So check this out. I like spot trading, right? I have a special spot in my heart for spot trading. There's a 5A cross on a 15. Okay. Remember though, you're like, well, there's a million 5A crosses. Well, the only one that matters is based on, A, your bias, and B, the setup. See, all these are not double tops. This is a double top. So now you get the rejection, the lower high 5A cross, take a shot, bro. And now if you're scalping, you got lots of little trades in here on the 5-minute chart. Right? You probably have 3 or 4 trades on there versus one spot trade. But ultimately, if you can't see this, you don't see, right? You don't see anything. If you don't see this, you don't know how to trade. And all this downside selling pressure, you'll likely miss or be late on. And I want to throw one more piece of information on this. Last week, like Thursday or Friday of last week, we already knew that this was the buy price and this was the exit price. So do you think that's important to see that the likely move of this week has already occurred? Right? Do you see how important it is? That you see this as old news in a sense. Like, yeah, we already played out this Aussie dollar. It ain't going higher. I mean, it might go higher, and especially if you're bearish on the USD and all that kind of stuff. Like, it can go higher. But in this situation, like, this is just happening now within this hour, right? You're looking at it, you're like, well, it might go higher, but probably not yet. I mean, look, we played this out. This is, right? We played this out. The smart money already took their profit. So this is sort of like second chance, right? And we know they don't have the gall to get out, right? So anyway, so if you didn't know this, right? How about, let's change it. If you didn't know this was a buy and this was an exit based on that buy, like if you didn't know that last week, you might not have conviction here because you're kind of at the whim of other things. Like you don't have the trade plans. So it all seems like magic, right? Where with like, that's a classic swing trade, right? That's straight out of the swing trading course at FX Bootcamp. Just absolutely to the T textbook. So it has to play on the psychology of this. But what if you don't know the psychology of the situation we're in? Well, then you're not going to have informed decisions. You might make the right decision, but it's not completely informed. You might not see the opportunity, but you might not also measure the risk properly. So again, if you plan on being short this the rest of the week, okay, you could wait for a 5A cross on a 4-hour, but it's going to take a day, okay? So you're going to get like that, which is it's congruent to what I showed you, the difference between like a 5-minute and a 15-minute, right? On a 5-minute, you had 2 or 3 trades already. On a 15-minute chart, it was just a simple 5A cross. One simple 5A cross versus some price action 2 or 3 times within that period, right? Because there's a lot of 5-minute candles in an hour's worth of trading, right? Or even a couple hours worth of trading, because this is, right? This is 8 hours. So that's what we did today. Imagine you didn't know what today was all about. Okay. So anyways, New York boys come in and sell it off resistance. Yeah. Okay. So now what, right? Do you wait for that 5A cross in a swing? Yeah, you totally can. If you're like a day trader, it's the trade of the day. So you would go in at maybe like an hour or a 30-minute, right? And what you're saying is New York is opening. So today I want to be short. Okay. To me, that's really a session trade. But if you're a day trader, that also works. Okay. If you're just trading the New York Open, you're like, okay, we're right on the line, bro. Right. And remember, I'm not saying sell here. What I'm saying is this part or this part, because the question is which 5A cross is best. Well, they're different, right? They're different. But what I want you to do is set your trades up on the 4-hour and say, I want to sell this today if it drops. Okay? Remember my book, Strategic and Tactical Forex Trading. The strategy here is you're like, I think I want to sell this top today. That's your strategy. Okay? You know the price, but you don't know the time. So now when you're at that price, you're like, okay, I'm going to drop into the 15. And if I get the price action, I'm going to sell the 5A cross. Okay? And that means you're short there. Okay? Or if you're scalping, even better, right? If you're going to trade all day on this, you expect it to fall at this price, and you're looking for a lower high to get in. So your first trade is, right, down, 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 up, up, sell, right? Now what? Down, 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 down. As soon as you make a lower low, you find the old support, drag it across. Somewhere around there is likely where you're going to sell in the future. So you're looking for the up, 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 up. So remember, it's 5 minutes, right? 5, 10, 15, 20, 25, 30. So it fades up for about a half an hour, and then boom, right? Bearish engulfing candle, 5A cross. So now you can use, on a 5-minute chart, price action with your 5A crosses being the trigger. Okay? And here's the cool thing. 15 or 20 years ago, this is how I was trading. And it's still the way I trade now. And my book, is now 10, 12 years old? This is all outlined in the book. It's been around that long, right? It's been around that long. So which 5A cross is best is what I'm trying to answer? Yes. Which 5A cross is best? Yes. Starts with strategy. What is your strategy? Master Trader says, I thought you were doing it on the 1-minute chart. And 3-minute, 1 minute, 3-minute, 5-minute. They're all my scalping, right? I don't trade 3-minute anymore on MT4. But back when I was using the deal book, I use 3 minutes. And then sometimes I use on one side I have a 1-minute chart. Next to it I have a 5-minute chart. But it doesn't matter. What's changed over the years is I stopped picking up the pennies. Like, for example, I might have done things in the past like sell here, exit here, sell here, and I'm picking up 20, 30 pips at a time. I don't do that anymore. I'm too old. I'm too pretty. So if I'm going to sell here, I'm done for the day and I walk away. I either make nothing or I pick up 100 pips, for example. Okay? Especially the last 5 years of grad school, right? Like being at Harvard the last 5 years, I don't sit and trade every 5-minute 5A cross. I mean, right? By the way, so anyways, we'll mark that as the end. So what 5A cross is the best? Well, you have to have the strategy first. And then the tactics of which time frame do you pull the trigger on? Once again, it's defined by the strategy that you want to carry out. If it's a swing trade, I probably wouldn't trade a 4-hour 5A cross, but a 1-hour 5A cross, yeah. And in fact, I would look at this and say, well, I'd probably trade that one. Like, I look at it and say, well, I'll trade the next lower high. So if it makes a lower low, so let's just say the rest of New York is still down. If I was making a swing trade off this analysis, I'd say, well, I'll let it fade up and I'll sell it in Asia tomorrow. Gone. Okay? So is it the 5A cross? Yeah, no, but it's strategy. And then if if I'm trading the New York session or I'm scalping, so now it's a market open play, 5A cross and a 15 is my bread and butter first strategy of my entire life. My first love in Forex was the 5A cross on a 15-minute chart. So, yeah. And then the next love I found after trading for a couple of years is I'm like, oh my God, there's waves inside of waves inside of waves. So like you could take a high risk scalp there and then you take a second chance and then you're on your third wave. And now see what I'm doing now I would mark this area, and somewhere around this price, I'm going to look for another opportunity to sell. Isn't that nice? Cool, right? Master Trader says MT4 doesn't have 2 minutes or 3 minutes, but you can get it. Oh, I see Master Trader on MT5. Yeah. It doesn't matter. That's what it, I found out that 99% of everything as a currency trader specifically is your decision-making process. How you pull the trigger, it doesn't matter. So especially if you're more of a swing trader and position trader, so you make, 280 pips instead of 330 pips on your trade because you used a different time frame or you used a different moving average crossover or something. It doesn't matter. It doesn't matter. Okay. When you're only picking up, let's say 25 pips per trade as a scalper, okay, yeah. It matters precisely when you get in, get out, because a little bit of a sloppy trade or a little bit of an unlucky trade takes 50, 60, 70 pips of your profit. But it's the same amount of work. So like I said, in the old days, I might like sell this one and then sell this one and then maybe sell this one, but this one doesn't work out. So like I lose on that one, which takes my profit away. And I'm like, well, hell, I could have just sold this, walked away and made the same amount of money or broken even or made more money. But all I know is I don't stare at the charts for 9 hours and come out slightly richer than I was yesterday. I'm like, well, that was 9 hours of pain. Okay. And of course, my other theory is the longer you stare at your chart, the more likely you're going to make a mistake. Cool, right? Cool beans. Okay. Click thumbs up, please. Also, again, this is a combination of swing trading and intraday trading, technical analysis, pivot point analysis, price action trading. There's a combination of these things, right? There's no fundamentals and stuff, but all of that as is at FX Bootcamp, like right now, almost 80% off. Like if that's like, if you just had a my aha moment, like, oh my God, you should just take the courses. I mean, seriously, like, right? Just, I don't know. That's what they're there for. FXBootcamp.com. If that's what you want, there it is. Like, you should do it. All that kind of stuff. All right. All right. So let me mark the end of that. Boom. Okay. One question, sir. You stated at times during entry you may bail after enter. What? I may bail after entering? I bail on a trade when it's not doing what I planned. Okay. That's the number one thing. Right? If it's not doing what I planned, then I get out. And what I do is, what I prefer to do is just stick if I'm slightly profitable, but I've lost conviction on the trade, I'll just move the stop to like -3, -4, -5, whatever. And I'm like, maybe I get lucky. I don't care. But if I'm negative, even if I'm only -8, -10, and I can see it not working out, I'm like, you know what? Just give me my money. Right? Remember, I don't care about losses. It's when people make poor decisions about risk management when they're afraid to take a loss. They're like, well, I can't get out now. I have -10 pips. But if I can get it back to break even, right? Which is the dumbest thing ever. Let me tell you, if you're properly leveraged, no one gives a damn about a -10 trade. It's tiny. Okay? But you ruin your trading by training yourself to get out at break even, or even worse, +1. Like, you were in the trade, why don't you just make money? Or if you've lost conviction in your trade because things are changing and it's -10, -12, take the loss. What do you care? It's tiny. It's nothing. Who cares? Who cares? But I like to mark my trades that are not working out as planned. I like to mark them as losses. Because there's no winner in a +10 trade, +10. That's your winner, right? Like, let's try this. I'll just throw one down here. Okay, we're playing price action. So at some point, right, if we're up here, I've lost conviction, right? Right? That's it. So I'll lose 12 pips or something. You're going to go, that sucks. Well, because the plan here was not to move sideways. The plan here was not to go up. The plan here was for this to continue down. So if it goes up and up and up and up, well, I don't want that. And another way of looking at it is you could say, well, at what point do you give up? Well, this looks like the price is higher than the higher high, but your stop is really just above the 786. So we know as traders, that's a retracement, okay? But if we're up here, it's almost certainly a reversal. Okay? So if we're up here, I'll take the loss. I don't care. It's a small loss. And I'm like, whoops, that didn't work out. Okay? That's that. If you want, we can... So a 618 predicts what? A 1382. So you have to put your stop just above 1382. Okay. So here's the plan. It's going to do this or lose money. Now, if it heads down to here, so let's say now it heads down to here and it's supposed to make a lower low and it starts to move up and fail, I'm like, wow, that's not supposed to do. That's supposed to make a lower low. Thought we're on a trend. But it's hung up here. Well, I'm going to say, well, that's bullarchy, right? So I could move the stop to -3 and say, if it does this, okay, now let me show you, right, this situation. It does this. Well, that's not what I planned on. So I'll take the -3 there. I don't care. It didn't, because that wasn't the plan. What was the plan? If it does this, oops. Okay. The plan was if it does this, then I make money. And now the interesting thing is I can leave it there and say, well, on this 5-minute chart, it's a 618 Fibonacci retracement predicting a 1382 extension, right? That's a scalp. But then I say, well, if I'm profitable there, what about this trade? If I can get it down to there, well, could it go down to here? And if I can get it down there, can I get it down to here? All of a sudden, my pissy little 5-minute trade could work out to make hundreds of pips. Why? Well, my pissy little 5-minute trade is actually based on the 4-hour chart. So if I'm going to go here, I might as well just let her run. Felix says, do I trade with Bollinger Bands? I used to trade with Bollinger Bands a long time ago. And I used them less and less because there's different measures of volatility. But also the really thing that got me is there was another guru that used 2 or 3 Bollinger Bands. And I'm like, that's really weird. Or not weird, but I'm like, gimmicky maybe. And then, so I studied John Bollinger, and the major thing about John Bollinger is he says he's misquoted and he sees people using Bollinger Bands in ways he personally had never intended. And like people often say, oh, just ride the band, ride the band. He's like, Dude, that's not what it does, right? So I don't know what the other people do. I just remember looking at it and I thought, well, am I missing something with Bollinger Bands? It's just volatility, right? It tells you two standard deviations from the mean. But is that important? Like if it's going up, it's got high volatility. So it's really when there's changing volatility from super high to super low, but I can do that in different ways. Or the other way is to tunnel it during low volatility times. But I find that a bit of a bet. Right? So I looked at him like, nah, it's not really helpful. I mean, like, it's not unhelpful. I'm not anti John Bollinger, but I paid attention to him and what it was supposed to be doing all this time. But if you go to my standard, FX Bootcamp standard, for example, oh, they used to be there. I just recently deleted them. That's interesting. How about template, FX Bootcamp simple? Yeah, there they are. So this is a setup I might have used years ago, but I look at it now like, so we used to like trade these tunnels and stuff, right? So I don't know if that's what's still taught, trading tunnels. And then I'm like, I don't know. It was too, at some point, I guess, as I matured as a trader, I got wary with things that are too technical. Oh, well, because of, my 3 Bollinger Bands, I'm gonna buy. I don't like that attitude at all. Because of that, because your MACD told you you're gonna throw money down, like it got too technically gimmicky. Like you're relying on your indicators too much, and I as I matured as a trader, started to ask more questions like, why does it happen? Why is the important part, right? Why is this going on? What is going on? Okay. So like, what does that Bollinger Band tell you now? Should you be buying or should you be selling? Okay. So the more interesting thing is there's things that look out into the future and all that kind of stuff. The tunnel stuff was the bigger the tunnel, the bigger the breakout. But how to use them? So here's my recommendation. Don't worry about it. Right? So like, like I teach you what I know works. There's lots of cool toys that you could add to this. And a lot of them I put on MetaTraders, right? But do you need those things? No. No, you don't. Right? So right now, this here. So first of all, how can I simplify the equation? Right? If you're doing math, you're always trying to simplify. All right, I don't need this. It's dead to me now. I don't need this yet. It's more like a future target, but the target doesn't help you into the trade. So the only things that matter on this chart right now is that this projects a double top. Okay? This right here, we knew it yesterday. Actually, earlier in the week, I guess that's Monday or something. But we knew, based on that it's probably going to double top. Can anybody confirm that? That I've trained you that over the years and years and years and years and years and decades, you've learned that? Like you look at that and you also say, aha, ha ha ha, ha ha, there's going to be a double top. Where's the top? Okay? And that you could do that. Yeah, Virgil says with the lessons learned on the tunnel strategy, yeah, it's 50-50, right? Yeah. All right, so lots of people here confirm that. So for the newer folks, you might say, oh my God, I'm missing things. Yeah, you're missing things. That predicts the future. All right, so now we're here. So could you be scalping short? Yeah. Could you be spot trading short? Yeah. Okay. Could this fall the rest of the month? Well, it's the 17th. It's a little late. How about fall for the rest of the week? It's Tuesday. Yeah. So we also know there's a potential for counter trend trade the rest of the week. And the rest of the month, it doesn't really say that. Right? The time of the month doesn't really suggest down for the whole month. It's ambiguous. Okay? But you might look at this and say that said down the rest of the month. Okay? That's what, so there you go. Do technicals answer all the questions? No, there's actually some really big questions yet to be answered here technically. So that you'd have to look to fundamentals for those. Kevin asked a good question. You know, do Asian currencies move a lot in the Asian session, or even more in the Asian session? Yeah. So like Aussie dollar right now is probably more impacted by the US dollar than by the Aussie dollar. And in the Asian session, the Aussie dollar, Aussie versus US dollar, is probably more impacted by the Australian dollar. Okay? For a manager account, which I'm not sure what you mean by that, what percentage you think is good to open a trade? The smallest one you could possibly make. Master trader, ECB talks to trader. They're going to be frustrated. Okay, they're going to be frustrated. So they're going to they're going to weaken the euro, and right now it may not happen. Now the euro is going to weaken in January. So they're going to get frustrated with the timing, but you watch. Euro's going to weaken in January. Okay. From your old videos, you stated to hold Japanese yen till January seasonality would still apply. Yeah, but not in the fourth year of an 8-year political cycle. So that changes. So that's not typical. Okay. So Fareed says, hey, Wayne, do you think bulls wanted to come down as well and enter next month's trade? Well, that's what when I was going through, like, it's the 17th of the month. So it doesn't tell you enough information to make that determination. If it was, let's say, the 27th of the month, it would be different. If it was the 5th of the month, I would also have a different answer for you. So right now when I'm like, it's ambiguous, it's neither here nor there on that answer. We can front run that ECB thing then. Yeah, I'm going to. Okay. In fact, people in my swing trading group, hope I don't give too many secrets away. I told them that 3, 4, 5 months ago. So yeah, front running the ECB thing. This is what we do. We're monsters. Yeah, front run the ECB. Yeah, that's what currency traders do. Okay? That's what we do. And in fact, getting that knowledge is the most important, biggest thing that you can have. Like scalping a double top at the open of a New York session. It's such, I mean, I suppose it's fun, but it's like, it's the trivial side of it, right? it's fun, but you can't do this day after day after day after day after day after day and have nothing else. You can't do it for 30 years and make any serious money doing it. Now, maybe in the beginning you're paying your dues. It's sort of like being a band, and you get really sort of famous in your little town, and you sell out all the bars, and you start getting money and girls, and they're like, let's get a record album, and let's rent a tour bus, and let's go on tour to other small towns, right? And you do that, and then you go on more tours and smaller towns, or more towns, and maybe a little bit bigger towns, and you just tour and tour and tour and tour and tour for years and years and years and years. And then when you finally make it big, and you're mainstream, you're really good. You're a very seasoned band that knows each other's and has gone through good times and bad, and you know how to play your songs, and you can sing your songs, and you know how to work the crowd, and you got a good roadies, and it just works really well because you're so experienced. So maybe this is like when you're starting on, when the vast majority of your business is now like 5-minute charts, 15-minute charts, 1-hour charts. What are you doing today? And then tomorrow you have to figure out what you're going to do tomorrow. It's sort of the starting point. You're playing in front of 80 people in a small bar, but you're earning your dues, right? So that later in life, you can do whatever you want because you're so experienced and you've done these things. You can drop into a 1-minute chart any day of the week, right? But really, the money is going to be like playing stadiums, launching an album and 20 million people buy it in the first day, right? Boom. So you will get bigger and bigger and bigger. So you start here, and once you can do this, you'll get a little bit bigger and a little bit bigger. But here's what I'm getting to, I suppose. The danger of trading like this only, remember, I'm saying just spot trading and scalping, and if you're only doing that, what happens is you will become frustrated that you're so good at it, but you're not making any serious money. Right? So what happens? You jack up the leverage and you threw away your career. Your multi-million dollar business, you threw it out the window, it's gone. As soon as you make that decision, well, I'm really good at this, but I'm not making serious money, so I'm going to put serious money on this so I can get rich. And it's the exact wrong decision. The problem isn't the lot size. The problem is as you're learning the skills, and it's important to learn these skills, right? I want to emphasize it. It's important that you know how to do this, that you can find hopefully you see the 4-hour double top, right? And then from then you can drop in all the way into a 5-minute chart and make all this money, right? But the next step, once you can do this and like a ninja, right? To get serious money, you don't increase your lot size. Your trades have to be worth more. I don't mean more because you put more on the bet, but your trades are worth more instead of you typically picking up 25, 30, 40 pips and you're so happy. That's a little spot trade. You make 40, 50 pips on a euro dollar trade, that's a spot trade, but you miss tomorrow, you miss the rest of the week, you miss the rest of the month. So what I'm saying is instead of your trades typically yielding 30 pips, you got to get to a point where it's 100 pips and then 150 pips. And then one day you're getting not all of them, of course, but in your trading, it looks like, 300, 150, 200, right? 88, 122, 286, 333, and that's what your trades look like. Your trades they just go a little further. But if your entries are so good because you started your first 3, 4, 5 years only trading small time frames, and then you learn fundamentals, you learn seasonality, you're using weekly, daily, and 4-hour charts just for your strategy part, all of a sudden your trades they just last longer. And you actually do less work and make more money without increasing risk. How many people would like to work less, make more money, but without increasing risk? And that's the next step. Right? And you could be the guy in his jet and he says, if you pay him money, just one trade a week can get you financial freedom. Just one trade a week. Well, I know you can do it, but it's, oh my God. Okay. But it's true. One trade a week. You can start there. You definitely could. Yeah, Jim likes to work hard for the pennies. Well, then the interesting thing is you end up really, truly understanding the value of money. Okay. So now we're going to know pretty soon if it's going to hit. What time is it? 9:06. My. 9:06. You guys let me know when I should move my stop.
You're listening to Trade the News.
Scalping is not hard. It just takes a lot of time. And most of the time you're not doing anything. No, I think what he's saying, Cave, is if you buy his course, you can learn how to make one trade a week, and you too will also have a private jet. I think that's what he's saying. Masters say like moving it. All right. Master says move it. With a goat. Yeah. Dude, you can have a goat in a dress with lipstick. Virgil says he's afraid of flying, but I think it comes with a pilot. I think you get a pilot too. Pretty sure. Huh? So remember the hiccup here, right? The hiccup. Where did we have it? I forget where we had it now. I outlined the hiccup, right? Somewhere in there. So now, like, could you do this something similar here? Okay. By the way, this is this.
5 minutes for next data. Industrial production for October expected 1.0%. Capacity utilization 72.3%. Manufacturing production expected 1.0%.
Hang on. You could look at this indicator the same as you could look at Bollinger Bands because it uses volatility essentially. I mean, it uses price action, but what's Bollinger Bands is looking at the change between candles, right? But it's looking at 1 and 2, like a typical Bollinger Band is 2 standard deviations from a mean. And in fact, it actually prints a mean, which I hate because I hate that extra moving average in the way. But it's doing just 2 standard deviations from a moving average. And I'm like, I want to do 2 standard deviations from candles, right? More like an oscillator than a moving average. Okay. And maybe that's helpful. If you remember, if you already had a plan that's somewhere around here, you want a double top or a lower high or whatever, yeah. So what do you do here? Okay. So again, what I've said before is knowing this top is much more important than what moving averages you use and all that kind of stuff, right? That you're ready, willing, and able at the New York Open, which is here, right? Yeah, so basically there's the New York Open, and you're like, well, I think this is going to triple top. Once you've made that decision, the rest is easy because you either don't get to trade or you do trade. If you don't get to trade, you didn't lose money. If you do get to trade, you're right. Cool. So is it going to hit the 1382 or what? Such an oversimplified trade. Oh, wait, I got it on the 618. What did I measure before? Yeah, I might have measured it wrong. Anyways. Typically, if I was, right, 32618.
For October, expected 1.0% capacity utilization seen at 72.3%. Manufacturing production expected 1.0%.
It's funny. I must have measured it on a different time frame. Right, the 618 predicts the 1382. I measured on the 5, yeah. So which one was I measuring, though? Oh, did I do the other one?
October industrial production and capacity utilization due out just a few seconds.
Yeah. All right, thank you. That makes sense. Thank you. So I like this information come out, by the way. This is good inside information, I think. I think most people overlook it.
So weighing the data.
Thank you, TradeTheNews.com.
1.1% for industrial production is 1 time higher than expected. Capacity at 72.8%.
Good numbers.
Higher than expected. And manufacturing production in line at 1.0%.
What do you think? Is it enough to weaken the US dollar? Cool. So that, yeah, pretty decent numbers, or at least better than expected. I don't have the revisions yet. But industrial production, capacity utilization, like, are we using our factories? And if so, how well are we using them? So production is up, but we're only at 3/4 capacity, which means, you know, not every machine is being used every minute of the day. Like you could probably still add a night shift, that kind of thing, right? Okay. There you go. That's how you scalp. All right, so was that helpful? Did you learn anything today? Was that good? A breakdown? 4 hour to the 1 hour to the 15 to the 5. The psychology of taking the loss. The use of what? Moving averages and Bollinger Bands and Fibonacci and pivot points and price action with multiple time frame analysis. Alex says, you make it look so easy, and these courses are getting me there worth every cost or every cent. Cool. That's very cool. So thank you. That I'm happy that it's working. Thank you for being part of the FX Bootcamp community, Alex.
These funds full overview of their vaccine candidate.
Very nice. Did everyone click the thumbs up button? No, apparently not. You guys didn't like it? I'm sorry. Yeah, now time for cigars and wine. Yeah. It's not a bad idea, actually. Watching NFP marathon on my videos. Super teaching today. Oh, thank you, Gary. That deserves a thumbs up. Yeah, but like 50, 60 people haven't clicked the thumbs up, so. Okay. So now imagine, how do you manage your stop? Okay. And the psychology would be different if you sold it here, or if you sold it here, or if you sold it here. The psychology would be different, right? That's why there's never one answer. It's like, well, why did you sell? Where did you sell? What was your intention when you did sell it? Right? Do I trail that? I don't know what your, I don't know, right? I don't know what your plan is. But like, I'm just showing you, like, when you put things together, it's not difficult to trade. If you've analyzed this and said it's going to go down, then selling it has got to be ridiculously easy. There's 19 different ways to do it, and they're all correct. On different time frames, using different tools, right? And you're like, well, I like Elliott Wave, and the others are like, I use CCI, and the other guy says, I use RSI. It's not like you say, oh, are you stupid or what? You use RSI? You should be using stochastics. What's wrong with you? What kind of, like, dude, it doesn't matter. It doesn't matter. I don't care how you do it. It's redonkulously easy to do. The only thing that changes is like the time. Like you should know the price. Like we should all agree that that's a double top. So if you want to sell a double top, that's the double top. We know the price. Okay, look we can grab wick to wick. We know that. And the cool thing about trading is like we know that. We know it in the future. You knew it down here. Like forget all the pivot points and stuff, but we already knew why that double top was going to form. Right? You understand that? We knew that last week. Like, oh my God, of course it's going to double top, right? Okay, cool. So now you get here and you're like, I want to get short. Good. I mean, that's a strategy. Is it going to work out? Do you know you're going to make money? No. But you clearly laid out a strategy. You're going to sell a double top. Okay. Right? Like, okay. So now what? How do you sell it now? So there's only two things you don't know. Okay, you know the price, right? So there's only two things to know, I guess is what I'm saying. You know the price. See, the price is here. So when you say to yourself, well, I'm thinking about selling it, and somebody says, well, what price? You're going to say, well, somewhere around 73.33. Cool. At what time are you going to sell it? Oh, well, you don't know that. Like, I don't know. It could be 6 o'clock in the morning, 7 o'clock in the morning, 8:22 in the morning. I mean, you don't know when. That's now you have to, like, you already know what you want to sell and why you want to sell it. So now that decision of at what time, well, that's related to you and your decision process, right? And all of them are correct because you're going to analyze it technically and make a decision. So it'll always be the right decision. You just don't know if the market agrees with you. You might be slow as molasses on a cold Georgia morning and you sell low at support because you still see the resistance high, but because you're so slow, you're late. Well, maybe you see it on a 4-hour like we talked, but you haven't mastered drilling down into smaller time frames. So that's the next skill you see it on a 4-hour and you say, okay, this is my strategy. Somewhere in the next few hours, I'm going to sell this double top. So drop into a 1-hour instead of a 4-hour. Drop into a 15. Maybe it's a 15-minute 5A cross. Practice that 100 times and see how often double tops off of pivot profit zones. Remember, it's not just a double top. Remember, why is it a double top? Because that's the pivot profit zone. It's the exact price we knew over a week ago would likely be the top. So now it's a double top on top of a top. That's called good technical analysis. Okay? Good. So now you got that. So at what price do you sell? Yes. Which 5A cross do you sell? Yes. Okay? So if you practiced over 100 times that you're going to wait for that, cool. For sure. For sure. Okay? And you're like, well, I want to really get in there. I want to be like a scalper. I want to get in there. I want to get my hands dirty. Sweet. Sell. Sell. Okay, but here's the thing. Here's the thing that's going to change your life. Change your children's life. And if you don't have children, maybe it'll change your neighbor's children. Because they'll come out and hang out with you because you got all these toys. Uncle Alex, you're so cool. All right? Here's the thing. You start getting good at this, and you'll say, well, if I'm going to trade that, right? Why would I get out here? You understand that? Like, this is what I'm trying to tell you. I just made, 25 pips or something? Okay, great. So why would I get out there? Makes no sense to me. But this is what you might be doing. You're like, I just made 25 pips. Like, dude, you just threw away 300 pips. So enjoy those 30 pips in your pocket, but just understand you threw away 300 because you don't quite know what you're doing. You're all tactics now and not enough strategy. Because if you get this right, like you're short there and you took profit now, I might argue, well, what if we're going to be down here next week? And you're like, oh, I got 30 pips. Well, you should have 300, son. So what did you do? You didn't manage your investment properly. And that's the key to like the big money. Whatever you think is big money, whatever your goals and aspirations are as a trader, once you get really, really good at the small time frames and you get now fundamentals and seasonality and just 4-hour and daily and weekly charts, when you put them all together and then you have the foresight, fortitude, the confidence, and the conviction, not for 30 pips, you're like 30 pips, right? You're like 300 or nothing. Because when I make a trade, I pick up 300 or I lose 3. Okay? Okay? So now, right, social media wizards, now it's the exploration of your trading of like, so how do you then have this unified theory? Okay, the unified theory of like how do you manage your stops and how do you let it run and how do you know when the run part has failed but you're up 200 or 300 pips? Well, it's an amazing question. And this is what we deal with in the swing trading group every week. How do you know? Because we faced this going in before the election. Traders in the group were up, let's say 200 pips, but a lot, like 3, 4, 5, 6, 7, 8 times they're up 200 pips. But they get knocked out of break even. Were they doing anything wrong? And how could they have improved their results? And so that's where the seasonality comes in. This is understanding how position trading, swing trading, and day trading have congruency with each other. And you're using that information to make decisions. So you like today when I opened up the Aussie chart, I think it was Aussie yen, I said, look, we're at a very, 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 very important spot on this Aussie because yesterday we had talked about monthly pivots and weekly pivots. And then I open up today, the daily pivot, and I'm like, look. If the daily breaks down, then it may be indicating that all of them break down. We know the daily is more sensitive than the weekly, and the weekly is more sensitive to the monthly. So if the daily breaks down, well, that can't be good no matter what for anybody in the medium and longer term trades, right? Because a day trade is just a day trade. But we're also inside weekly swings and monthly positions, and you're like, well, if the daily breaks down, house of cards, right? Or it's like Jenga or whatever. You pull the day trade out, and the weeklies and the monthlies can collapse. Not always. If you do it right, you can survive. But it's knowing which one to pull on and which one to leave alone, right? So that takes some experience and, of course, some education. Like, I can't just tell you because there isn't one answer. Right? Okay? Okay? So, for example, like when we're talking about strategy and tactics, in the book club, I imagine we're going to read Market Wizards. I just imagine it. It just seems like it's a book that everyone should read. If you're a trader, you should have read it. Now, it's old now. And it's actually quite fascinating to read about how people used to trade. Okay? But we're not going to read it because these market wizards are good traders. We're going to read about it because they're not good traders. Now, of course, there's some positive lessons learned in these books. For example, Paul Tudor Jones and his stories of having a plan so that you're always ahead of everyone else that doesn't have a plan. Okay, I like that one. Okay. There's another one. I forget the guy's name, which guy it was, but the guy that wouldn't even stop trade planning during the interview for the book. Like the story goes, and we'll have to look up who it is, but Jack Schwager gets a referral to a successful trader. So he calls him and like, I want to put you in a book. The guy's like, no. Calls him up again. Oh, I want to feature a book, and it's all about trade planning and, and all this kind of stuff and what makes you success and good habits. I'd like to put you in this book. Can I interview you? No. Can I interview you? No. Ask the guy 3 or 4 times over the course of maybe whatever amount of time, right? No. So he calls a guy who calls a guy who calls a guy that knows this guy. And like, get me this meeting. So finally, right, the friend of a friend calls the trader up like, dude, meet with Jack. Come on, meet with Jack. He's like, all right, gold, dang it, I'll meet with Jack. So Jack, he calls Jack back. He's like, all right, I'll do this interview with you. But one thing, please note that I always do my homework, my trade planning. I always do it at 5 p.m. Right? Every day. And he's like, it doesn't matter that I have like 200 employees working for me as a trader now. I do my trade planning, and I do it after the market closes, and I write everything down. And then when I come in the morning, my trade plans are sitting on my desk, and I already know what I want to do. I've already planned them all out. Imagine the lesson there. So while you're interviewing me in my office, I'm going to be doing my trade planning. And then once I'm done, the interview will be done, and I will go home, and I will not think about trading. If you're okay with that arrangement, I will allow you to come in and interview me while I do my trade planning. So they talk about the trade planning, obviously, and what it does psychologically. Like if you have 100 employees or something, like why would you do your own trade planning? Okay. So anyways, there's the idea of discipline, right? So there's some lessons in there, but I can tell you the turtle traders were monkey heads, stupid. And then people come out and they worship these guys like, oh, the turtle traders. Like, it's stupid. They were idiots. And I'd like to go through and talk about that and why. And maybe you agree with me, maybe you disagree with me, and we can talk about it. So, it should be very interesting. Master Trader says the new edition. Yeah, I'd have to thumb through it, but I might want to just do the old, right? I don't know anything about the new one. I guess that's why I should read it. But anyways. Master Trader's up 17,000 on the Zippity Czar. Yeah, so you got enough to go to Starbucks. That's cool. Wait, did I kill Trade the News? I think I killed it. I haven't heard it in a while. Trade the News. I'm going to pop them back on. I mean, they must have been talking over me. All right, what was I going to do? Oh, yeah, let's take a look at some exotics.
You're listening to Trade the News.
All right, so let's see. What was the trade plan I outlined for you? I don't quite remember. Is that facetious? You probably don't like facetious. Like, oh my God, this guy's condescending. All right, I didn't mean to be condescending. But it's sort of like, right? Now, the interesting thing is, that's not very much different than the trade I just showed you on a 5-minute chart. What about the art of war? Yeah, I guess so. Maybe. No, that's much more business strategy. Oh, Adam Smith, Wealth of Nations. So I've read the first edition of the Wealth of Nations. I've held it in my white glove hands up from the vaults of Harvard. What's that little library called? It's really fascinating. So when in between two libraries at Harvard, there's this like little house. Houghton? The Houghton Library? Anyways, you go in, it's a little house, and you have to take your bag off. Well, you walk in, and there's like a foyer, a wooden rotunda, and there's just a person with a gun and a badge sitting at a table. And it's pretty cool. It's pretty cool. You walk in, you're like, what the? And you're like, so what is this? They're like, well, this is, the secret library. So they said, over in that room, you take your bag, your backpack off. Well, first of all, they check your student ID, right? Then they're like, okay, take your backpack off, take your phone, and put all of that, put any electronics, put it in the locker, lock it up, and all that kind of stuff, so it gets locked in there. And then come back and they check the ID and they record you and everything. And then they say, okay, go over there to that door, and I'll buzz you in. Bzz, you go in there, and then there's librarians. There's like 3 people in the room. Well, 3 students, let's say, and then like maybe 2 librarians behind a counter. And they come up to you, and they talk like this. And there's just tables, right? And they're like, what would you like to see? And you're like, I would like to have the first edition of Adam Smith's Wealth of Nations, 1776. And they're like, okay, go sit over there. And they go down, and it's really cool because it's just this house in the middle of Harvard campus, right? It's this tiny little thing. Well, it goes like 6 or 7 or 8 or 10 stories below the ground. And the librarian goes over and disappears. Like, you don't see anything. You don't see any books in this place. And they disappear. And they go down, 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 down in the falls. And they come back with white gloves and everything. And they put it down on this special sponge that kind of holds it up so you can read it. You have to have a permit to read the book. And they teach you how to turn the pages. And you wear white gloves. And so I've read The Wealth of Nations, the first. So is it good? I have a copy that's over 100 years old. I don't know. Oh, it's right here. All right. Here we go. All right. Let's see. Is it good? Let's do it this way. Full webcam. Okay. I guess I have to point at a camera. Adam Smith, Wealth of Nations. Okay? See that? All right. This is... This is from... This book's never been opened, by the way. So I'm going to open it for you. Look at it. It's never been opened. Look, I haven't even... The pages have never been opened. Isn't that amazing? There he is. Okay. Look at that. It's never been opened. Look at. We're the first person to look at that page. And I'm trying to... Where does it show the date on this book? I don't have glasses on, so I can't even read that. Oh, yeah. Okay, here we go. So this book is from 1909. First edition, Harvard Classics bookshelf. Is it good? So I've read the original book. And I can tell you it's fabulously written. Even Karl Marx was a great writer. But so we're going through it like natural and market prices. wages of labor. I mean, right? The profits of stock, natural inequalities. Like we're dealing with right now inequality, right? But it was written about in great detail hundreds and hundreds of years ago. Political inequalities, rent of land for materials. So what, of course, he's now probably writing, so I haven't read this chapter, but he's almost certainly quoting Ricardo in this stuff. So, that's what I'd like to take us through. But, the butcher, the baker. Oh yeah. So there's a whole section and this is great. So when I got the first edition, this is what I read. Okay, I went straight to page 233. You can't see this. Okay, that's a big title. The whole thing is on money. There's a whole chapter on money. The experience of maintaining the fixed capital in a great country may very properly be compared to that of repairs in a private estate. The expense of repairs may frequently be necessary for supporting the produce of the estate, and consequently both the gross and the neat rent of the landlord. By more 42 and 443 of The Wealth of Nations by Adam Smith in the chapter about money. If they employ it, of course it being money, if they employ it in purchasing goods in one foreign country in order to supply the consumption of another, or in what is called the carrying trade, whatever profit they make will be in addition to the neat revenue of their own country. In 1776, no, did I lose you? Yeah, why? I don't know why. Is it going to bring it back? Are we back by any chance? Weird. That was YouTube. And I'm telling you, this was an amazing moment. And then I look up and you're gone. All right. Let me share this with you. I don't know where you left, but this is actually very amazing. Okay? Yeah, the Illuminati shut me down. You're going to be too knowledgeable as a Forex trader. Okay, let me remind you. Let's go back to where we were. Adam Smith, 1776, The Wealth of Nations, chapter on money. We're talking about money now. Okay, you ready for this? This is crazy. This is going to blow you away. We're reading stuff that's hundreds and hundreds and hundreds of years old. Listen to this. You ready? So we're talking about money. If they employ it.
Quarantine as he awaits his test results.
Let's get rid of that guy. All right. If they employ it, money. If they employ it in purchasing goods in one foreign country in order to supply the consumption of another, or in what is called the carrying trade, whatever profit they make will be in addition to the neat revenue of their own country. Adam Smith in 1776 was writing about the carry trade in foreign exchange. oh my God, right? Do you see where I get excited? Hopefully you geek out like I do. This is not new concepts. And yet we're walking around like, hey, look at me. I fly in a jet. I can make you rich. One simple trade a week. Right? I mean, there's real knowledge in this life, in this world. Humanity isn't just figuring it out. Right? Right? I think it's pretty amazing. And imagine everything else that you don't know. So Ricardo was before Adam Smith. And you know he's talking about Ricardo in rents. And before that, John Locke would have been talking about the value of private property. Okay? And then before that, there was, Machiavelli is talking about trade and free trade. Just very, right? Just very, very interesting stuff, I think. So does that blow anyone away? Is anyone here blown away that Adam Smith very clearly and articulately, see, I'm not as educated as I think, right? Is anyone here amazed that Adam Smith in The Wealth of Nations specifically was writing about things like the carry trade? Is anyone blown away by that? No? The butcher, the baker, the candlestick maker. Well, but the thing is, right, Dr. Age, like we think we're just figuring things out or things are new, but they're not new. Right? So there's a wealth of knowledge in there. So anyways. And that isn't that cool? That book is 109 years old, and we read it for the first time here on YouTube. It was never opened. So I'm just looking at I got all these books here, and then most of them are still wrapped in acid-free paper, so they've never even seen sunshine. And they're inside a closed cabinet. So anyways, thanks for hanging with me while I geek out. It doesn't look like that many people are that impressed. All right, so that's the stuff I geek out on. I think it's amazing. I think it's truly amazing. So I appreciate his contribution to humanity. And of course, all he's done is been educated and just wrote about the other things he read about in books. So he did his best to compile all kinds of information about how to run an economy, in particular a capitalist democratic. And what happened when the founding fathers started the United States of America, they picked up that book and they said, we're going to do this. So if you're American, see, Adam Smith is Scottish. He wrote it in 1776. No joke. He wrote it in 1775, published in 1776. And after the Revolutionary War and America became an independent country and the founding fathers got together to write all the rules of their new country, they picked up Adam Smith and they said, this is America. So every American should read it. Yeah. Yeah, Americans are run by Scott. Hey, I know some Scottish people. Wait, I'm Scottish! Yeah, so anyways, so thank you for being here. Thanks for geeking out with me. And hopefully you picked up some technical analysis today. Little thing on how to scalp into a spot and do a swing into a position. I hope it worked out for you. I'll see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. Cheers.